economic reform doubts. The Eurozone finance ministers meeting to discuss reforms promised by Athens. We heard that at the top of the hour. That's taking place here this afternoon. Bonds have been rallying as well as the ECB's bond buying program has started. Let's just recap some of those top stories, in fact, because we have seen this bond rally taking place with the ECB's buying beginning. 30 minutes to go until Apple's Spring Forward event, and French telcos, they dip on fears of a new price war.
Okay, so that's a summary of European markets. Okay, folks, my name's Adil. I'm just going to give you a rundown of today's session in Europe. A look at the UK and European markets and as to what's going on. Okay, let's start with fundamentals first of all. We come in today post the aftermath of the US market sell-off, given the fact that the interpretation is that the jobs data was stronger than expected, which obviously sparks fears of interest rate rises, etc., etc. And obviously, if you increase the costs of capital or of money itself, it obviously hits emerging markets. That's one of the reasons why India was more than likely down today, and that is negative for equities, because obviously the costs associated with obviously finance can hurt and impede growth. Okay, so it's all about the rate rise fear, okay, in the US, and obviously that has an impact on the rest of the market. So the US, or should we say the Asian markets, first of all, the Shanghai was negative, but eventually pushed higher to close up by 1.88%, given the stronger export data that came out over the weekend, although imports fell quite drastically and people were concerned initially. The Shanghai was negative 0.4%, I think, at one time, if I can remember correctly, last night when I was awake, and obviously reversed and powered higher, so that was quite impressive. Although having said that, the Nikkei did close down 180 points, and the Hang Seng itself was more or less flat. Okay, so obviously the highlight going into this morning was the fact that the Shanghai had obviously reversed, and given the fact that there are growth concerns going forward, there more than likely will be easy monetary policy, or maybe a possibility of more rate cuts going forward. And obviously that is being interpreted by the Chinese investors as potentially bullish, because obviously anything that has an easy monetary policy going forward itself is generally a good opportunity to buy. Okay, as opposed to the US markets, obviously rate rise fears is certainly not helping the US markets. Not helping the US markets at all. Okay, so that's basically the situation that we found ourselves in terms of Asia. Okay, FTSE 100 closes down 35 points, minus 0.5%. Eurostoxx negative as well. Okay, CAC 40 negative. The only the outstanding index really is the German DAX, but even then, certainly circumspect, because we had negative data out this morning from the German DAX perspective. If I can remember or recollect correctly, what I generally tend to do is I generally copy and paste my important news events. Okay, so we had German exports down. German exports down minus 2.1%, worse than expected. We had trade balance obviously worse than expected. We had concerns with regards to Greek tensions being revived as creditors reject reform lists, so that was a negative article. And the news flow generally out of Greece certainly seems to be negative, given the fact that their draft proposal has been rejected. Okay, so Europe group discussion on Greece said to be over. Sounds like they told them to get on with it or else, etc., etc. So that certainly raised its head again. Okay, so that was certainly a factor. Although from the FTSE perspective, there was some good news out of WPP, and obviously London financial sector itself didn't certainly have an effect on the upside and failed to push or propel the FTSE 100 higher. The Athens market was under pressure, obviously down 4%. That's not exactly good news, obviously, given the fact that the Greece uncertainty is back. Then we had the MICEX. We still have the political ramifications from the chap who was murdered, Mr. Nemstov. Whether or not that was, I don't know what's happening there, to be honest with you. I'm not really going to comment, but that was certainly down minus 1.8%, so overall negative. And given the fact that the only highlight was really the Shanghai that stemmed any major losses. Okay, Now let's have a look at the market from a technical perspective now that we looked at the fundamentals, because overall German data was negative. So how did Germany fare? Okay, so let's go to the German market first and foremost. Okay, so if we look at the daily market or daily chart of the DAX, and let's see how this closed. It certainly seemed to have closed flat, more or less. Okay, so we still have this key trend line being respected. So again, I'm going to persevere with it. Okay, until obviously we fail to hold, and then I'll have to see exactly how this market is going to perform. But given the fact that we had weak economic data, we still haven't sold off on the German DAX, which is quite impressive, given the fact that the QE, I mean, happy QE day, by the way, folks. This is what I'm going to name the video today, happy QE day. QE obviously came into effect, and that certainly negated the bearish ramifications of the weak export data out of Germany. Okay, because obviously QE dictates and rules. Now let's go to the 60-minute chart of the German DAX. The previous resistance equals support certainly held well there, 11,450, which as I expected, and the market certainly bounced. Okay, on the 60-minute chart. Now at present you have double top resistance, so 11,600 more or less is your resistance zone. Okay, so 11,600 is your resistance zone. So again, it's that double top in play. Okay, so we obviously closed the gap, given as soon as we had news regarding the QE being, I mean, it's almost perfect timing for the bottom. You had previous resistance equals support here, and all of a sudden QE gets announced, or basically there's news that the German Bundesbank or certain ECB has started to purchase German debt, and all of a sudden, boom, the market certainly short squeezes and rallies, closes the gap, and obviously closes at the highs. So quite an impressive close there. Okay, on the German DAX, given the fact that the export data this morning was very weak, and we had the Greece concerns in the background as well, and obviously the fact that the Nasdaq is certainly under pressure, regardless of the iWatch, certainly has failed. I mean, I was long the Nasdaq today. I ended up closing the Nasdaq and the Footsie for +5, although I was stopped out on my Eurostoxx longs early in the morning given the sell-off, and I was stopped out on my Aussie longs as well over the weekend, even though we had stronger export data, and the Shanghai was obviously up by 1.88%, which is quite strange, but that's the market, folks. You have to put your stop losses in place. Okay, and they're there to protect you. Okay, so this is basically where we find ourselves with regards to the German DAX. The 11,600 will be key resistance. Obviously, if you go and move past that, then obviously that's impressive, and you have to respect the tape, respect the price action. The market remains bullish regardless of the weak export data and the concerns regarding Greece, because QE trumps all that. Okay, the French CAC. Okay, French CAC remains weak, as you can see from a 10-minute chart straight away. Let's always start from a larger time frame. So daily chart, certainly a doji candle, so certainly indicating exhaustion here. Okay, something certainly worth watching, and certainly does indicate weakness to me, from my interpretation of the price action today. 60-minute chart, as you can see, we failed even to go back to test the previous highs. Certainly not basically signs of bullish price action. Okay, so certainly is holding this resistance zone here. Okay, as you can see, certainly is holding that resistance zone at present. Okay, 10-minute chart, obviously we closed a gap on the way down. Once we closed the gap, we bounced, and realistically it's not, it's just moseying along really. There's obviously an unfilled gap above. The market obviously isn't respecting that. These two trend lines we can get rid of now. It's all about that gap fill support of 4917, currently around the 4937 region. We'll see exactly how this plays out. At present, it's in a neutral zone. Obviously we did have an uptick, we have built a base, we haven't made lower lows, so we'll see whether or not we can either close that gap, and obviously, or we obviously move lower. That's certainly up in the air. The iWatch, the reaction to the iWatch news will obviously dictate there. So that's certainly something to observe and keep an eye out for. Okay, Eurostoxx. This was a cheeky bugger. It stopped me out and then obviously reversed quite powerfully. But either way, that's the market, folks. You have to put your stops in place. I did expect Eurostoxx certainly to move higher than expected. Either way, that's where we are. Okay, so Eurostoxx on the daily chart. Let's just quickly bring that up first of all. Bear with me. Okay, Eurostoxx. So we obviously have this trend line here. So we put in a doji candle. We failed to obviously 2 dojis in a row now. So certainly indicating exhaustion. Certainly something to keep an eye out for going forward. 60-minute chart of the Eurostoxx at present, again holding this resistance level here, just like the French CAC. The only obviously outstander is the actual German DAX. And the 10-minute chart of the Eurostoxx, just elaborate on that. Back to there again. Okay, so we failed to close the gap. That's the important factor here. Okay, so we've obviously failed to close the gap. We held the previous support equal resistance over here. Okay, and now we are looking for a potential. I mean, we've held the gap. Well, we haven't closed the gap exactly, but we are around the gap level region. So again, that's going to be your resistance in the short term. So your gap level is around the 3618, and then obviously double top resistance at 3634. Again, the movement on the Nasdaq and the iWatch will basically tell all and reveal all. But this certainly seems like a H&S formation, as you can see here. I mean, you've got this left shoulder here, which has already been formed. Okay, so obviously we've thrusted higher, and now we're creating this bear flag formation, just consolidating, and then obviously a potential move lower, and we'll see exactly how that transpires. So that's something to certainly keep an eye out for, and certainly to observe. Certainly indicating exhaustion, but again, it's all about the iWatch and how the market reacts accordingly. Okay, so that's the Eurostoxx. Now let's have a look at the FTSE 100 now. We can look at the FTSE 250. You can clearly see 60-minute. The FTSE 250 is put in a double top, so that certainly has confirmed that. Certainly seems like it wants to test the 200 MA. The bull flag certainly has failed, so definitely a double top and a weakness on the FTSE 100 there. The FTSE volatility index certainly is putting in some type of support pattern here, looking for a potential bullish move higher. Okay, the FTSE 350. Let's just observe this as well. Obviously, quite a substantial sell-off here on the FTSE 350. And again, it is indicating exhaustion. So again, 60-minute chart certainly has put a double top pattern in place. Okay, so that's certainly worth obviously noticing. Certainly something that needs to be paid respect to in the interim. The daily chart of the FTSE 100, again indicating exhaustion. Certainly has failed to propel higher today, and has actually broken out this channel. So this is something I didn't expect to happen. I expected it to remain in the channel and obviously continue to move higher, but this is now expecting to potentially come lower and test this level in this region here. Okay, so you're looking at around a potential 6,800 test, and again, everything will be dictated by the movement in the US markets overnight. Okay, that's basically where we are with regards to the FTSE 100. 60-minute chart, let's go to zoom in slightly, give you a better understanding. Your pivot high obviously at 6960, 6970 will be the resistance, and the level that we play off. Obviously if we break that, then obviously we are obviously going higher, but for now it certainly seems like a potential bear flag scenario. Certainly is setting up to potentially test the 6820 level, potentially set to 6780 even, and certainly looks weak on that front. The 10-minute chart certainly has built a base, and that certainly needs to be respected. But having said that, we waited. I mean, from my perspective, I was long and waiting all day for price pattern and time, and obviously time failed for the markets to really propel higher. Even with the German DAX pushing higher, that still certainly failed. So again, signs of weakness from that perspective. I mean, you had a thrust higher on oil as well, and still we failed really to propel higher. So that certainly isn't a good sign. Okay, certainly isn't a good sign going forward. And the movement will really be all about the S&P 500. Yes, we've had a bounce of the S&P 500, but the 60-minute chart still remains a H&S formation. So, and this bounce is certainly feeble as well. So again, the S&P 500 is certainly indicating to me that this is very, very weak. Now the Dow itself as well, if you look at the Dow Jones, yes, we've had a thrust higher, but the FTSE failed to follow the Dow higher. The Dow's rallied almost 100 points, and yet the FTSE's lagging, and certainly in the background. So certainly no thrust or no conviction in terms of the buying opportunity there, and that's mainly more than likely due to the US dollar strength. Okay, certainly is not helping commodities. Neither did the Chinese data overnight, although I did expect that to occur, and that didn't transpire. So it was a shame, even though copper has bounced off quite significantly off the lows. I mean, almost $8. Oil obviously 50 cents. Certainly Gold certainly is languishing, potentially building a base, but that I waited all day for that. So price, pattern and time, when the market fails, when you wait and wait and wait, that generally indicates exhaustion, potential weakness, and certainly potential bias change and switching to go in the opposite direction. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.